Hello and welcome. Today we're diving into a topic that's reshaping the global economic landscape, the rise of BRICS Plus and the growing movement of de-dollarization. This is not just a story about a few emerging economies teaming up. It's a fundamental shift that could challenge the dominance of the US dollar and reshape global trade and finance as we know it. Part 1. What is BRICS Plus? Let's start with the basics. BRICS originally referred to 5 major emerging economies: Brazil, Russia, India, China, and South Africa. Formed in the late 2000s, BRICS was seen as a response to the dominance of Western-led institutions like the IMF and the World Bank. But in recent years, the group has expanded, unofficially known now as BRICS Plus, to include countries like Iran, Egypt, the United Arab Emirates, Ethiopia, and Argentina. And many more are expressing interest, such as Saudi Arabia, Indonesia, and Nigeria. The idea behind BRICS Plus is to create a multilateral bloc that represents the global South, countries that are rich in resources, young in population, and hungry for economic independence. Together, BRICS Plus countries now represent over 40% of the global population and nearly a third of global GDP, and that influence is growing fast. Part 2. Why de-dollarization? So why is this group pushing for de-dollarization? For decades, the US dollar has been the world's reserve currency. Over 80% of global trade is still conducted in dollars. Commodities like oil and gold are priced in dollars, and most international reserves are held in dollars. But that dominance comes with consequences. It gives the US an enormous amount of financial power. Through mechanisms like SWIFT sanctions and asset freezes, the dollar has been used as a tool of geopolitical influence. After the 2022 invasion of Ukraine, Western countries froze nearly $300 billion of Russia's foreign reserves. For many countries in the global South, this was a wake-up call. If it can happen to Russia, it can happen to anyone. De-dollarization, then, is not just an economic strategy. It's a political and strategic decision. Part 3. How is de-dollarization happening? De-dollarization isn't just an idea anymore. It's happening on multiple fronts. Bilateral trade agreements. Countries like China and Russia have already shifted the majority of their trade away from the dollar. They're now trading in yuan and rubles. India and the UAE are trading oil in rupees. Brazil and China have signed deals to trade in local currencies, bypassing the dollar entirely. Central bank reserves. Many central banks are reducing their dollar holdings. Instead, they're increasing reserves in gold, Chinese yuan, and other regional currencies. Payment systems. BRICS countries are developing alternatives to the SWIFT payment system, which is heavily controlled by the West. Russia has its SPFS, China has CIPS, and there's growing discussion about a BRICS-led payment network, possibly even a new shared currency for trade. Digital currencies. Several BRICS nations are exploring or launching central bank digital currencies, CBDCs. These digital currencies could be used for cross-border trade, making it easier to bypass the dollar. Part 4. The role of China and Russia. 2 countries leading this movement are China and Russia. China has been promoting the yuan as a global currency for years. It has signed currency swap agreements with over 40 countries and is pushing the yuan's use in energy and commodity trade, especially with the Middle East. Russia, after being heavily sanctioned, has become one of the most vocal supporters of de-dollarization. It now conducts the majority of its trade with China in yuan and rubles, not dollars. Together, these 2 powers are laying the groundwork for a multipolar financial system, where no single currency dominates global trade. Part 5. Challenges ahead now. It's important to understand that de-dollarization won't happen overnight. The dollar is still deeply embedded in global finance. It offers liquidity, stability, and trust, things that other currencies may lack. BRICS plus countries face significant challenges: lack of unified financial systems, political differences among members, limited global trust in some of their currencies, geopolitical tensions. For example, India and China have border disputes. Brazil's economy is still volatile. Russia faces heavy sanctions. These differences make it hard to form a truly unified monetary system. Still, the trend is clear. More countries are looking for alternatives to the dollar. Part 6. What would a BRICS currency look like? There's been speculation about a potential BRICS currency for trade. Some call it a BRICS coin, or even a gold-backed currency. While nothing is official yet, the idea is simple. Create a neutral trade currency, not tied to any one country, to settle international payments among BRICS members. This could reduce exchange rate risks, promote trade within the bloc, and further weaken the dollar's grip on global commerce. If this happens, it could be a major turning point in monetary history. Part 7. The global implications. So what does all this mean for the rest of the world? For the U.S., a weakening dollar could mean less global influence, higher borrowing costs, and less demand for U.S. debt. For investors, it may trigger a shift toward commodities, emerging markets, and alternative currencies like the euro, yuan, or even Bitcoin. For developing countries, it opens up new pathways for trade and finance without needing U.S. approval. But it also creates uncertainty. A fragmented global financial system could lead to instability, currency wars, or regional crises. Conclusion: the rise of BRICS Plus and the movement toward de-dollarization is more than a trend. It's a signal of a world that's becoming more multipolar. While the U.S. dollar isn't going anywhere in the short term, its unchallenged dominance is certainly being questioned. This story is still unfolding, and the next decade may determine whether the dollar remains king or becomes just one currency among many. Thanks for watching, and if you found this video insightful, don't forget to like, share, and subscribe for more global economic insights.